I'm David Walston, work with Walston Advisory Firm, and today I wanted to do a quick overview of the 1120S, which is the small election by a small business corporation tax return. For most of you small business owners, this is the form you will be seeing once your taxes are prepared, and those taxes are due March 15th, unlike individual taxes, which are due April 15th. So I figured it'd probably be a good idea to go do a quick rundown of what that form looks like and what kind of things you need to kind of keep an eye on, so you know what to look at when you're reviewing it and what questions to ask your tax preparer. So let's take a look. So this is the 1120S for 2020. At the top here, just with a 1040, is your business information. So always make sure that the name, address, employee ID, date incorporated, things like that are correct still. And then election date should be up here, and business activity. All of these should be the same pretty much every year unless your address changes, of course. Most of this doesn't apply unless you're amending or you have a final return or there's a name change, address change, things like that. So we're going to jump down to here. This is where your income and expenses are going to show up if your S-Corp is a normal business, meaning it's not a rental S-Corp. If it's a rental S-Corp, there's a different form for that, and we'll talk about that maybe on another video. This video, we're just going to talk about this form and a couple of the pages following. So up here is you got your gross sales, returns, allowances. That'll make sense. Checks out your balance, so the difference between those, and then cost of goods sold. So this right here is not really, from my perspective, this is kind of your gross profit. But this is gross profit unless you have net gain loss from other things or other income. So most of the time these won't be filled out. For most small businesses, there are times they will be, most of the time you won't. So you'll have gross profit, will just flow from 3 to 6. So here, officer's compensation, that is you as an owner. That is where your reasonable compensation should hit. And then here is your salaries and wages for everyone else. And then you got some other detailed expenses that are written out here. One of the ones that you want to look at the supporting information for is your depreciation, so number 14. And then you want to look at other deductions, the attached statement. So there should be a statement that details what makes up that dollar value, and you want to look at that to make sure that that checks out as well. And then you get your ordinary business income, which is really your tax business income. So most small business owners won't have to deal with most of these things here, but you do have some credits and other specialty deductions that you can take. If you're cash basis, there's also some different things that you don't have to worry about. But that's the front of Form 1. You got your ordinary income loss here. You do not pay taxes on that. As an S-Corp, that gets passed through to the partners or the members, whatever you want to call them, and then you sign the return here. Page 2 is questions about your business. So cash and accrual. Most of these are going to be known unless you're a somewhat larger business. So you can read through them and see. It would be a good idea to just read through the questions one time to understand what they're asking, so that you can understand whether most of them are going to be no for most businesses that are small. And then down here, one that isn't necessarily going to be no is this one here. So does the corporation satisfy both of the following conditions? The corporation's total receipts for the tax year were less than $250,000. The corporation total assets at the end of the year were less than $250,000. If this is a yes, that means you don't have to provide a balance sheet as part of the tax return. If it is a no, then you would fill out, we'll pass this one real quick. You would fill out this here. This would be filled out. So this is a book balance sheet. And then if you come down here, this is going to be a reconciliation from what your book accounting net book is, or net profit is, any tax adjustments, and this should equal your tax net profit. So this line here should equal this most of the time. And then this line here should tie to your balance sheet, your books. So if you're using QuickBooks or something like that, that should essentially tie there, unless there's some weird things that aren't in your books that should be. And then this balance sheet should tie to your books. All right, so this sheet here some more questions you can read through. But these are things that are designated specifically on a K1 for a shareholder. So this is where the things are going to show up. So this is where you're going to see, so up top here, if you have a rental business, you're not going to see rental income and expenses here. You'll see that on here. You'll see it on this line here. Gross rental, net rental business income right here. So that's where you're going to get your business. If your S-Corp is a rental business, that's where the net income is going to come through. And there's going to be attachment that detail the properties and the income and expenses for those rental properties. But that's where it's going to come through. And then you're going to have your ordinary business from the top page there. And then if you had any distributions, it should show up on here as well. Not on this one. Distributions will show up at the bottom, sorry. This is going to show your distributions. So any money you took out of the business should show up here. So you're going to have whatever your retained earnings sort of is for tax purposes, plus your net income of the year, less any other reductions or increases based on tax to book differences. And then depreciation subtracted out of your net income gives you your balance. The issue is if you have a negative balance, and I don't think you can for S-Corps, but for partnerships, that can cause tax issues. So like I said before, this is going to detail the different types of income that are going to show up. You'll see section 179 in here as well for your depreciation. So that'll show up there, split out. Any charitable contributions your S-Corp made will be here. They will not be deducted up on here because it's not a deductible expense for an S-Corp. It's a pass-through expense. So there's a lot of other categories on here, but most of the time small businesses will have ordinary income, maybe rental, and section 179 and charitable contributions. You'll also have probably some interest income here, and that kind of makes sense because that's also a pass-through. That's not income from the up here reporting side of things. It's a pass-through income. So that's a quick overview of the S1120S. There's a lot more detail on there. There's tons and tons of schedules that can be attached and should be attached. But that's just a quick overview for a smaller business, what to look for when you're talking to your CPA or when they send you your 1120S to look over. So let me know if you have any questions or comments. Feel free to leave them down below or shoot me an email. I'll have that in the description. And like and subscribe. Thanks.